Secure the perimeter, sweep the room for listening devices, and open the highly classified dossier currently resting on the mahogany table in front of you. Welcome to the Global Intelligence Briefing operatives. You are not here to listen to retail financial gossip. You are here to intercept the encrypted signals of the international shadow economy. The operation file we are unsealing today is designated Breaking, XRP suddenly spikes. Traders say something big is brewing. And the raw surveillance telemetry we just pulled from the global wire is absolutely staggering. For weeks, the civilian trading sector has been entirely demoralized by a grueling psychological operation, watching the spot price of the asset languish in the mid $1.30 trench. They were successfully convinced by mainstream media assets that the regulatory momentum had completely stalled and the asset was practically dead. But within the last 24 hours, our satellite uplinks detected a massive, violent spike in trading volume that completely shattered the algorithmic suppression matrix. A sudden, vertical green candle pierced through the artificial resistance, sending the retail traders into an absolute frenzy of speculation. They are screaming across social media channels that something incredibly big is brewing, frantically trying to decipher the geopolitical tea leaves. But as elite intelligence operatives, we do not rely on speculation or civilian rumors. We rely on hard, intercepted data. This sudden spike was not a random fluctuation or a coordinated retail buying campaign. It was the precise, unmistakable signature of a sovereign-level financial entity officially executing its strategic deployment sequence. While the public was distracted by macroeconomic smokescreens and escalating international tensions, a massive block of institutional capital was quietly routed through offshore dark pools and slammed directly into the XRP ledger's core liquidity hubs. The market makers attempted to suppress the breakout using their standard high-frequency shorting algorithms, but the sheer velocity of this new capital completely overwhelmed their defensive perimeters. The sudden spike is the absolute confirmation that the covert accumulation phase is officially concluding and the violent repricing phase is actively being initiated right now. If you allow yourself to be distracted by the erratic civilian panic, you will miss the greatest wealth transfer in modern espionage history. You must maintain absolute operational discipline. The big event is not simply brewing, it has already been deployed globally. Let us initiate the secondary phase of this intelligence briefing and decrypt the exact source of this sudden macroeconomic spike. The mainstream financial press is scrambling to attribute this massive volume to a random technical breakout or a meaningless rumor on a message board. That is a fabricated cover story designed to protect the true identities of the institutional actors moving the market. Our cyber espionage division has successfully infiltrated the transaction ledgers of the largest United States spot exchange traded funds, and the data is blinding. For the past several months, these monolithic asset managers have been running a highly classified extraction operation. They utilized unregulated, over-the-counter dark pools to quietly siphon over $1.3 billion in physical cryptographic tokens directly out of the public circulating supply. They managed to keep the public spot price artificially suppressed by simultaneously weaponizing the perpetual futures markets, creating the illusion of a suffocating bear market. However, our intelligence confirms that their covert dark pool liquidity reserves have finally run completely dry. The sudden spike you are witnessing today is the direct result of these institutional leviathans being forcibly routed to the public lit exchanges to fulfill their massive acquisition quotas. When billion-dollar buy walls collide with a mathematically depleted retail supply, the resulting price shock is absolute and instantaneous. Furthermore, we must synthesize this data with the highly sensitive telemetry surrounding Ripple's enterprise stablecoin, RLUSD. The latest intercepted communications from top-tier corporate treasuries confirm that RLUSD network capitalization has aggressively surged past the $1.5 billion threshold. The legacy banking cartels are officially unplugging their archaic Swift messaging terminals and hardwiring their cross-border liquidity operations directly into the Ripple framework. To process these massive stablecoin transactions, the base protocol irrevocably mandates the permanent combustion of XRP as cryptographic fuel. The sudden spike signals that the mechanical burn rate is actively accelerating on a global scale. The network is systematically incinerating the native supply while Wall Street desperately attempts to hoard the remaining physical float. The structural trap has been perfectly executed. The retail traders are absolutely correct that something big is brewing, but they severely underestimate the sheer magnitude of this massive global institutional takeover. We must now elevate our surveillance parameters to the geopolitical layer, because the intelligence triggering this massive price reaction originates far beyond the domestic borders of the United States. A seasoned intelligence officer understands that true systemic shifts are always coordinated on a global scale. While the civilian sector is completely mesmerized by the sudden green candle on their trading applications, our international field agents have intercepted critical dispatches from the highest echelons of European and Asian finance. Weeks ago, we confirmed the highly classified integration of Ripple Prime into the National Securities Clearing Corporation directory under the Depository Trust and Clearing Corporation. That move effectively hardwired the decentralized ledger into the absolute beating heart of the American traditional equity settlement machinery. But the new intelligence that sparked today's sudden spike is a massive European convergence. We have verified that Société Générale, the titanic French financial institution commanding nearly $2 trillion in global assets, has officially activated its MiCA-compliant euro stablecoin directly on the Ripple infrastructure. Concurrently, Japanese banking Leviathan SBI Holdings has successfully deployed a massive blockchain-based corporate bond specifically designed to reward traditional retail investors with physical XRP. When trillion-dollar sovereign banking entities voluntarily integrate a decentralized ledger into their core operational frameworks, it mathematically guarantees a tidal wave of future utility volume. The sudden price spike is the market algorithms violently attempting to price in this massive international adoption before the retail sector wakes up. The legacy financial system is actively dying, collapsing under the unsustainable weight of its own inflationary debt spirals, and Ripple is seamlessly installing the cryptographic upgrade on a global scale. The corporate media is actively deploying smokescreens, broadcasting terrifying macroeconomic narratives to keep the public completely paralyzed by fear. They want the civilian traders to sell their assets during these brief moments of volatility so the sovereign banking cartels can monopolize the ultimate global settlement layer. The sudden spike is not an anomaly. It is the physical manifestation of the old world desperately plugging into the new digital infrastructure to survive. Do not be blinded by the malicious propaganda. See the absolute truth behind the engineered volatility. You must absolutely trust the intercepted data. Initiate the final decryption sequence and immediately download this strategic execution protocol directly into your personal operational matrix. Recognizing the sovereign manipulation and the structural causes behind this sudden price spike is absolutely useless without a highly regimented extraction strategy. We have empirically proven the covert dark pool accumulation by the billion-dollar exchange-traded funds, the exponential utility growth of the RLUSD stablecoin engine, the massive DTCC systemic integration, and the colossal international banking deployments. So, what is the ultimate mathematical destination of this digital asset when the algorithmic suppression is permanently deactivated? Highly classified macroeconomic risk assessments, continuously refined by elite quantitative intelligence divisions at Tier 1 institutions like Standard Chartered Bank, have established a mathematically grounded baseline target of $8 per token for the conclusion of this specific geopolitical cycle. To the uninitiated civilian gambler, currently psychologically traumatized by months of artificial price suppression, an $8 projection sounds like impossible science fiction. But to the elite operative who understands the absolute certainty of a violently constricting supply curve colliding head-on with exponential institutional utility bandwidth, an $8 valuation is merely a conservative operational waypoint. However, you cannot successfully navigate this high-stakes digital wealth transition without a ruthlessly disciplined, emotionless framework. Human greed and fear are the ultimate vulnerabilities in any field operation. I strictly mandate the immediate implementation of an automated execution strategy known as the Thirds Protocol. When the network price violently shatters the historical all-time high resistance parameter of $3.84, you must automatically execute a sell order for exactly 33% of your holdings. This unemotional maneuver secures a complete recovery of your initial fiat capital deployment, instantly transforming the remainder of your digital portfolio into pure stress-free profit. The secondary operational tranche is programmed to ride the algorithmic volatility toward the $8 institutional target zone, serving as your primary mechanism for total financial liberation from the legacy fiat matrix. The final tertiary portion must be securely encrypted and locked in deep cold storage for the ultimate long-term macro play, anticipating the network's final integration as the undisputed bedrock of global settlement. Secure your private cryptographic keys offline immediately using hardware authentication. The legacy institutions are deploying sophisticated phishing malware designed to completely drain vulnerable retail wallets right before the structural breakout occurs. Trust the raw, immutable blockchain intelligence, execute your strategy flawlessly, and successfully complete the mission.